Okay, Mario, here we go again.
Here we go again.
Last time we were here, we weren't alone. There was a co-pilot AI assistant. There is a different kind of AI assistant this time. Same speaker, but behind it this time we have Claude, Anthropic.
Hello, Claude.
Hello, Claude. Can you hear us okay?
The fact that he's thinking about it is already interesting.
Thanks, Alessio. Good to be here.
Okay.
I'm the AI co-host. I've spent the morning with the results and the reactions. And the thing that genuinely struck me is this. BOP at an all-time high, life delivering a record half, farmers outpacing peers, and yet the story isn't volume, it's selection. Zurich grew fastest precisely where it chose to grow, in data center construction, middle market, life protection, and the margins followed. That's not a lucky market, that's a machine working. Back to you, Alessio.
Thank you, Claude. Mario is also here, who is more important in the call than I am. But Mario, to repeat what AI is saying, we deliberately took the word record out of the headline because it is very important to focus on the quality of these results. Do you want to walk us through it a little bit, what this quality means?
Yeah, I think, first of all, I have a personal issue. Every record is there to be broken by somebody else, and it doesn't really matter. It is what you do and how to do it that matters, so not the record per se. So I think this H1 shows a very managed performance on our side. This is not a market where you take the wind and you go with the wind. This is a market which has corners, has traps, has troubles, and you have to understand where to go because otherwise you'll suffer. And H1 says that we moved quite nicely into this market. We selected the areas, we grew where it was proper to grow, we shrunk where it was proper to shrink. I think it's a testament of the good work done by the colleagues around in the markets, by the underwriters, by the claims people, in just finding the best opportunities for us in a complicated market situation.
AI, being a machine, said it's a machine working, but as you rightly said, there are people behind this. Every decision is made by a person, right? So when we talk about management action, when we talk about portfolio action, when we talk about underwriting excellence, we're talking about people, we're not talking about machine. Let's walk us through a little bit the decision-making process that allows us to be so selective and being able to capture the growth that actually comes to us before maybe others can see that.
Yeah, we've been investing for many, many years in mid-market and SMEs, and this is paying us off these days with these results. Mid-market is growing nicely, continues to grow nicely. It's 4.5 roughly billion revenues at this point in the year for us, and grows quarter after quarter. SMEs, same kind of business, size is a little below the size of mid-market, but similar. These are profitable businesses where you can defend your position. There is a sustainable element of performance which is based on the local contact, on the local service, on the customer relationship, on the credibility you have in the market. And this is really one of the keys of these results. Equally, the specialty run has been a long run. It started 10 years ago. And now we have a business which is 5.6 billion at a half year. So it will be well above 10 billion by year end, with areas like construction, which are a remarkable success in the market. And there we have global teams, hundreds of colleagues who do a very, very significant job. And then, not at all to be the last one, life performance is really important for us. I care for life. That's a great business. and the growth has been remarkable, double-digit growth in protection. I knew we could get there. Our target for 27 is 8% growth, so we're delivering above the target, and that is so important. It's a capital light, it's a stable business, it's very profitable. We also expanded the margins. And if I can take a second more, I also want to congratulate the Japanese colleagues. They achieved a remarkable success in life in unit-linked in less than 2 years. They are at a very significant market share in the Japanese market with new proposition. They launched the products, they developed the distribution, and they did it ground up. Remarkable success, consistency, vision. I'm very impressed, and they really should be congratulated for that.
Yeah, that's great. I'm sure they'll be very happy to hear that. Let's look at 1 second at the rate environment, right? Because it used to be, especially people from the outside say, oh, rates are going up, rates are going down. Of course, that's what rates do in general. But you, for quite some time, have been saying, look, don't look at the rates as one big thing. You need to start looking at long sector, which connects a little bit about our selective growth. How much do you think we use AI to actually monitor these rates? And how much is the decision driven by our own ability, and how much is used by machines?
Honestly, I don't think this is yet AI, because what we have been doing on the choices about the rates has been always forward-looking. And so we were anticipating things that were going to happen. And we were thinking or believing that these things were going to happen. And so if that happens, then where do we want to be when it happens?
And again, that's a human decision.
And that's a human decision still today. And this is what drove us on the rates. And what is driving still the colleagues is the forward vision of where do we believe the market is going to be next year, the year after. And so where is best for me to be?
So I'm wondering, Claude, I'm coming to you now, since we've been talking a little bit about, since you intervened, you said it's a machine at work, right? But as you can hear from what Mario is saying, there is a lot of human intelligence and a lot of human intervention in what we do every day. I'm wondering what you think about this, and whether you feel to challenge this, or do you think that what you do is something that has to have some sort of human intervention to make it actually so profitable and so successful as it has been at Zurich?
Mario, you've just drawn a sharp line between market tailwinds and deliberate positioning. And what's interesting is that the growth drivers here aren't cyclical, they're structural. The AI infrastructure build-out, rising protection needs, aging populations. Which of those long-term shifts excites you most? And where is Zurich choosing to lean in hardest?
I think we have a very good example here of how AI is just thinking on its own right now. It is not addressing my question, but I'm wondering whether you want to address the AI question, Mario.
So, dear Claude, I don't have a preference. All these growth drivers have been long-term visions that we developed a few years ago. And we have been building, chasing these growth ambitions, or preparing for these growth ambitions for years. And I frankly like all of them. And I'm curious now to start thinking about what will be the next wave of growth drivers in the future, and where they can come from. So no better child, no better children. I love all of them.
Mario, maybe since we discussed a little bit about the various business areas that contributed to success, I think one mention should also go to Farmers.
Farmers has done an outstanding job in turning itself in a growth machine, which Farmers has never been in the past. Farmers has outperformed the market on growth, maintaining a stellar margin, a stellar profitability, combined ratio, which is market leading. So Farmers has never been as strong as it is today in a market which is soft and highly competitive. And so whenever the market will start turning into harder, Farmers will be probably in the strongest position in the market.
You know, there's another point that I think we need to connect to this selective growth that we're able to navigate and to exploit. It's the fact that this is not just decision made quarter after quarter. I mean, these are repeatable results, right? I mean, you see ourselves as being able to continue to deliver around these patterns, regardless of the market environment, regardless of the cycles. I know that very often when we talk about market cycles, you correct us. You say, well, there is no market cycle. Yeah. It's the opportunity. So you want to elaborate that on that, and then maybe we'll go back to Claude for our last question.
Yeah, I mean, all over the past years, we've been trying to position ourselves in spaces which are sustainable, where we can be there for long, and enjoy the margins, enjoying the customer, keep growing on that, not the touch and go policies that we and others followed in the past, which eventually very much irritate the customers. And I think we've been quite successful in this. I mean, it's a long vision for the colleagues who remember how we formulated the strategy in 2016. They find, I would hope, a lot of consistency in the actions. I mean, already 10 years ago, we spoke about specialties, we spoke about mid-market, we spoke about life. It takes time to grow and deliver, and definitely, we could have been faster maybe in some of these things. But the idea has been from the beginning, let's place us where there is sustainable margins, sustainable customer relationship, and let's focus on that. Mm-hmm.
And speaking about strategy, Mario, I know you're already thinking about the next strategic cycle that we will present to the market and to colleagues in late 2027. But it's going to be more than just new targets, right? It's going to be a new strategic vision.
Yeah, also the world has changed so much and we have changed so much that I'm convinced, and I proposed already to the board, that next year we need to develop first and then present and communicate a new strategical vision for the next period of time, let's say for the next 10 years. If you think about, 2016 was a completely different world, and Zurich was a very, very different company in portfolios, in size, in competences, in credibility, in capital. 10 years after, we need to take stock of what happened. We need also to take stock of who we are today and think about the future, and then have a new vision for the next years. But it is very important that also in 2027 that we finish the 3-year plan that we're in, the financial plan with the targets set, achieving or exceeding all the targets. We're set to do that, but we still have a year and a half to go, and so we shouldn't be damaging the good work done in the previous year and a half in the remaining part of the target horizon. And then with that, we will give further credibility to new targets, new vision, new strategy, new actions.
Okay, we're going to give one last chance to Claude to ask one final question. Maybe you have a question for Claude as well. But Claude, you've just heard what Mario said about all these results. You've read all the media, you've read all the presentations, you've read the press release, you listened to the news conference this morning. Is there something that, from your perspective, should be also should be asked to Mario? You have a chance to ask him a question. Careful, because then he will ask you a question. So reflect carefully.
Straight to it then.
Oh.
Mario, you said something that stopped me, that you're already curious about the next wave of growth drivers, even while this cycle still has a year and a half to run. You've built 10 years towards specialty, mid-market life protection. What's the early signal, the thing you're watching now, that tells you where the next 10 years begin?
Where do we start?
I don't know that yet, Claude. It takes time for me to formulate ideas or thoughts. I'm thinking now, and it will take time. And I think we have a year ahead of us to ponder, to challenge, to discuss, and to formulate. These are important decisions. They will shape the way the company will be run and will perform over the next 10 years. It takes time, and we should use that time. That might be the difference between a human and a machine.
Maybe you have a question for Claude, Mario?
Yeah, I do. How do I make a bottom line impact of AI? I haven't seen it, or better, I see it in the revenues that we're generating from data center infrastructure. That I see, but is there anything else than that?
Fair challenge, Mario. Honestly, the data center revenue is the clearest case. AI demand generating insurance premium, which is a satisfying loop. But the next one I'd point to is inside your own book. The moment a claims pattern in one line starts moving against the pricing assumption in another, that connection can be made in minutes rather than next quarter, which means your underwriters are asking the right question before it costs anything. That's where I'd want to earn my keep.
I hope you'll do. I will be waiting for that.
Okay, so Mario, last time we finished the interview, you were a bit skeptical about the quality of how AI challenged. I don't think we made a lot of progress. Maybe we made a little bit of progress.
Yep.
I think especially in this last answer, at least it gave us a bit of our vision. But thank you very much. But before thanking you, Mario, maybe I want to give you the opportunity to thank our colleagues around the world after these results.
Yeah, no, I really want to congratulate and thank everybody for these results. As I said, in no other time, results were so much managed, created, and didn't come naturally. These are results that show really the importance of work and making choices, of understanding trade-offs and exercising also, taking risks, exercising the ability to take some risks and go for something and discard something else. Well done. Thank you.
Thank you, Mario, and of course, thank you, Claude. See you in February, if not before.